Hey everyone, welcome back to my channel Jobseekers, where we explore many educational topics and latest jobs. In this video, we'll discuss about claims in cash application. By the end of this video, you will know how many types of claims in cash application. So let's dive right in. So first, we start with what is claims. Customers may submit claims to submit overpayments, compensation for damaged goods, or promotional accruals. Other situations involve customers taking illegal deductions or paying more than what they owe your organization. You can create different types of claims based on the nature of claims that must be settled. When a claim is created, all the information necessary to process the claim is recorded. This information includes the claim type, reason for the claim, customer information, contact information, broker and sales representative details, the amount, and the currency type. Now, how many types of claims? So, first, payment claims, deduction claims, adjustment claims, chargeback claims, reconciliation claims, miscellaneous. So, what is payment claims? Partial payments. A partial payment generally refers to a situation where only a portion of the total amount due is paid or received. This might occur in various scenarios such as splitting bills, paying off part of a debt, or receiving a portion of a payment due to incomplete processing. Advance payments. An advance payment typically refers to a payment made ahead of time for goods or services that are to be delivered or rendered in the future. This is common in various business transactions and personal arrangements, where the payer provides funds upfront before receiving the agreed upon goods or services. Now move to the deduction claims. Short payments. A short payment refers to a payment that is less than the total amount owed or expected. This might happen intentionally or unintentionally in various scenarios such as partial bill payments, error in payment amounts, or dispute over the correct amount due. Promotional allowances. Promotional allowances refers to discount, rebates, or incentives offered to users as part of a promotional campaign. These allowances can be used to encourage specific actions such as making a payment, referring new users, or using certain feature of the app. Promotional allowances are essentially credits or reductions applied to transactions. Returns. Returns refers to the process of reversing a transaction and refunding the payment to the payer. This typically occurs when a purchased item is returned, a service is not rendered as expected, or an error in the transaction needs to be corrected. Managing returns effectively is crucial for maintaining customer satisfaction and ensuring accurate financial records. Damaged goods. A damaged goods claim refers to the process initiated by a customer to request a refund or replacement for goods that were received in a damaged condition. This type of claim is part of managing returns and ensuring customer satisfaction when products do not meet expected quality standards. Next type of claim is adjustment claim. Credit memos. A credit memo, short form of credit memorandum, is a document issued by a seller to a buyer that reduces the amount the buyer owes. This is often due to a return of goods, an allowance for damaged goods, an overcharge, or other adjustments. The credit memo effectively acts as a credit that the buyer can use against future purchases or as a reduction in their current payable balance. Debit memos. A debit memo, short form of debit memorandum, is a document issued by a seller to a buyer to increase the amount the buyer owes. This can occur due to additional charges, corrections of undercharges, or other adjustments that result in the buyer owing more money than initially billed. Write-offs. A write-off refers to the accounting action of recognizing that a specific receivable amount will not be collected and therefore removing it from the account's receivable ledger. This is done when it's determined that the outstanding amount is uncollectible, often due to reasons such as debtors' insolvency, disputes or aging of the receivable. Next claim is chargeback claims. Bank chargebacks. A chargeback is a return of funds to a customer initiated by the customer's bank. This is typically in response to a claim that a transaction was unauthorized or fraudulent, or that the goods or services were not received or were not as described. By effectively managing chargebacks in the cash application process, businesses can mitigate financial losses and maintain healthier relationship with their customers. Fee adjustments refer to the process of reconciling various fees that may apply to transactions within a company's account receivable system. These fees can be added or subtracted from the total amount due or received, and they need to be accurately reflected in the financial record. The next claim is reconciliation claims. Unapplied cash refers to payments received by a company that have not yet been matched to specific customer invoices or accounts. This situation occurs when there is insufficient information to determine how to apply the payment, or when a payment exceeds the amount due on any outstanding invoices. Let me explain more about unapplied cash. So what is key aspects of unapplied cash? Here are some sources of unapplied cash. First is partial payments. When a customer makes a partial payment that does not correspond exactly to any outstanding invoice. Overpayments. When a customer pays more than the amount due, leaving a surplus that cannot be immediately applied. Unidentified payments. When the customer lacks sufficient details such as customer name or invoice number to match it to a specific account. Prepayments. Payments received in advance or issuing an invoice or before services products are delivered. Now, what is implications of unapplied cash? Cash flow management. Unapplied cash can distort a company's view of its cash flow and account receivable, making it difficult to accurately forecast cash inflows. Customer relations. Unapplied cash may lead to confusion or disputes with customers if their payments are not properly credited. Financial reporting. Accurate financial reporting requires that all cash be properly applied to specific invoices to reflect the true statement of accounts receivable. Now, how to manage unapplied cash? Detailed documentation. Maintain comprehensive records of all incoming payments, including payment method, amount, and any accompanying details. Customer communication. Contact customers to obtain necessary information for applying unidentified or unclear payments. System integration. Use integrated accounting and cash application system to automate the matching process and reduce the occurrence of unapplied cash. Regular reconciliation. Perform regular reconciliation to ensure that all payments are applied correctly and any unapplied cash is identified and addressed promptly. I've already explained unapplied cash in detail. Now we move to unidentified payments. Unidentified payments in cash application refer to payments received by a company for which the payer or the purpose of the payment cannot be readily determined. This situation can arise when the payment lacks sufficient information to match it to a specific customer accounts or invoice. What is key aspects of unidentified payments? Here are some sources of unidentified payments. First is incomplete payment details. Payments made without accompanying remittance advice or with insufficient details such as missing invoice numbers, customer names or payment references. Electronic fund transfers. bank transfers that do not include clear payer information, checks, physical checks received without corresponding documentation or with illegible information, bulk payments, payments that cover multiple invoices without a detailed breakdown of amounts applied to each invoice. Now, what is implications of unidentified payments? Delayed cash application. Unidentified payments remain in a suspend account until they can be properly identified and applied, delayed the cash application process. Customer relations. Customers may experience issues such as receiving incorrect statements, late payment in notices, or disruptions in service if their payments are not accurately credited. Financial reporting. Unidentified payments can lead to inaccuracies in financial reporting, making it challenging to track account receivable and cash flow accurately. Now, how to manage unidentified payments? Suspense account. Temporarily record unidentified payments in a suspense account while investigating their origin and purpose. Investigation and research. Conduct through investigations to identify the source of the payment, which may involve reviewing past transactions, contacting the bank or reaching out to customers. Documentation. Maintain detailed records of all unidentified payments, including the date, received amount and any available details. Customer communication. Proactively communicate with customers to obtain the necessary information to apply the payment correctly. Now we move to next type of claim, miscellaneous claims. In miscellaneous claim, there is intercompany transfers. Intercompany transfers in cash application refer to the financial transactions that occur between different entities within the same parent company or corporate group. These transfers are used to allocate funds, settle debts, or balance accounts between subsidiaries, divisions, or related entities. What is the key aspects of intercompany transfers? Purposes: fund allocation, distributing funds from a central entity to various subsidiaries or divisions for operational needs. Debt settlement, settling intercompany's loans or advances. Expense allocation, distributing shared expenses such as administrative cost, IT services or marketing expenses across different entities. Balancing accounts, correcting imbalances in intercompany accounts and ensuring accurate financial reporting. Here is the process of intercompany transfer. First, initiation. The process begins with a request or need for a transfer, typically initiated by one of the involved entities. Approval. Transfers often require approval from higher management or the finance department to ensure they are justified and within budgetary constraints. Transaction. The actual movement of funds which can be done through internal banking system, electronic fund transfers or journal entries in accounting systems. Documentation. Detailed records are kept for each transfer, including the amount, purpose and involved entities. Now move to the next miscellaneous claim is refunds. Refunds in cash application refers to the process of returning funds to a customer, usually in response to a return of goods, a cancellation of services, or a billing error. Properly managing refunds is crucial for maintaining accurate financial records and ensuring customer satisfaction. What are the key aspects of refunds in cash application? Here are the reasons for refunds. First is product returns. Customers return products due to defects, dissatisfaction or other reasons, leading to a refund of the purchase amount. Service cancellations. Customer cancels services either before or during the service period, resulting in a refund for unused portions. Billing errors. Mistakes in billing such as overcharge or duplicate charges necessitate refunds. promotional offers, refunds issued as part of promotional offers or satisfaction guarantees. What are the best practices for managing refunds? Clear policies. Develop and communicate clear refund policies, including conditions for returns, timelines and methods of refunds. Automated systems. Utilized automated systems to process and track refunds, reducing the risk of errors and improving efficiency. Customers communication. Keep customers informed throughout the refund process, providing updates on the status and expected timelines. Regular audits. Conduct regular audits of refund transactions to ensure compliance with policies and accurate financial reporting. Training. Train staff on refund policies and procedures to ensure consistent and fair handling of refund requests. Thank you for watching this video. If you like this video, then please hit the like button and share this with your friends. Also subscribe us to connect for more videos, and please let us know in comment if you required any video on any particular educational topic.